90 minutes into the trading day, stocks falling as today's China AI model DeepSeek is really sparking a sell-off here. Joining me now, we've got Justin Haywood, who is the Haywood Wealth Management president and co-founder. Justin, good to have you back on. You say diversification is critical for investors. So how should investors be looking to diversify?
Yeah, absolutely. Thanks for having me on. Obviously, depending on where you are in your retirement journey, you'll want to have a portfolio that's aligned with your personal risk tolerance. So today, obviously, just sort of amplifies that need. Bonds are a great place to be. The 10 years yielding 4.5%. Another thing that people have been beating the drum on for a while is the equal weight S&P, and today is a big win for that equal weight S&P when you see the top end of the S&P down so heavily. So you just want to remain diversified, have exposure to many different asset classes and sectors, and that way on a day like today, you're not going to take as hard of a hit. Now, you may not see the same upside over the long run, whenever the market is roaring like it has been, but on days like today, you sure would be happy.
Is there safe risk to assume when you look at a pullback like this and on a day like this, where I get what you're saying, and having that diversification, you have exposure to your safe havens, and then you have exposure to some risk propensity as well. But is there good risk, and how can an investor assess that even on a day like today?
Yeah, sure. I mean, in order to, over the long run, outpace inflation, you're going to have to take on some level of risk. I mean, the only quote unquote risk-free asset is a short-term U.S. Treasury. So even with bonds, if you're getting further down the 10 to 30 year maturities, there's some level of risk there. Now, again, depending on your risk tolerance and what you are comfortable with, that's going to determine just how much risk you want to take. But there has to be some risk in a portfolio. Otherwise, you're just going to be sitting in a checking account forever and not earning much.
Yeah. Justin, of course, we have a ton of big events this week. Earnings, you've also got a Fed decision. Let's stay on the Fed decision for a hot second here. What is your outlook for what we could see announced from the Fed, and ultimately what they could set the tone for the rest of the year as well?
Sure. I mean, I think for this meeting, they're going to hold rates steady. You might have seen last week, Trump was asked about his potential pressuring the Fed to bring rates down, and was asked if he thinks that they would listen to him, and he said he thinks that they will. So with the PCE coming in Friday, what I'm sure the Fed is really hoping for is some softer inflation. That way, if they do get some of that pressure from the president, it will the cuts will at least be, in their view, warranted.
Justin, while we have you here, thinking through some of your top plays right now, what is at the kind of forefront of your mind as you're looking at the markets on a day like today and really charting what the next big investments that you or some of your clients are looking to make are?
Sure. I know today with the DeepSeek news, it's really difficult to keep things in perspective, but I think we are still kind of in the early stages of a secular AI trend. I think there's still a lot of potential in the technology sector. NVIDIA is getting crushed today on that news, but you see Meta, I think last I looked, was up a couple of percent today. And possible, there may be some possible beneficiaries, even Amazon being able to tap into some of these open source AI models since they haven't been developing their own. I still think you want to have some weighting to big tech, but again, you'll want to make sure that that's in line with your overall risk tolerance.
Justin, thanks so much as always for taking the time here on the day. Appreciate it.
Thanks, Brad.